Right, ladies and gentlemen, we have another big guest here on the channel. It is Hitesh Oberoi, the Managing Director and CEO of Info Edge India, who is joining us live today on the market. Hitesh, good morning. This is Dentara. Before we get into the specifics, I think opening comments have to be with what's going on. The route that you're seeing in the global markets, that you're seeing in the Indian equity markets, the sell button being pressed so hard by the foreign investors as well. The new age companies, which had become the darlings of the stock markets, brought Gen Zs and millennials to the stock markets, are also out of favor. That's, of course, the global trend, whether it's a Policy Bazaar, a Paytm, a Nykaa, a Zomato. Would love to get your opening comments first on what we are seeing in this entire debate of the sell-off and the markets putting a premium on cash.
We've been public for the last 15 years now, and every few years the markets go up and down. I think as operating managers, all we can do is focus on our business, focus on our customers, focus on creating value for them. Many of these factors which influence markets are beyond our control. So you had a Zomato trading at 160 a few days back. Now you have a Zomato trading at 80. We were at 7,000 a few days back. Now we're at 4,300. Maybe we'll go down to 3,500. Maybe we'll go up in a few months. What we've also seen, at least I've seen in the last 15 years of being public, is the bad times don't last for more than 2 or 3 quarters, right? So you have steep corrections from time to time. But, if you keep your sort of head over water, if you focus on your business and if you keep executing, then the bad times won't last for long.
But Hitesh, what we had started to see was, of course, a big run up, right? It was in the public markets and it was in the private markets. When you talk of your stock also coming down to 4,300, it may be because the investments in the private market space. There is talk that this time the private market lag is not so much with the public markets. They're catching up, that there is a fear of missing out is turning out to be joy of missing out. Tech stocks are falling out of favor. So in that sense, it's not your normal cycle of a slowdown or a sell-off.
You're right. So, but in a lot of ways, I think a lot will depend on what happens in the next few months. So till about 2 weeks back, we were talking about the Indian economy going back to 8%, 8.5% GDP growth, right? And suddenly, of course, there's this fear of inflation, oil prices going up and stuff like that. And therefore, people are now beginning to believe that maybe the year will not be so good. But, what if this war in the Ukraine sort of gets over? And what if there's a ceasefire in the next few weeks? Things could go back to normal very quickly. So, I think, the jury's still out on what is likely to happen going forward. Long term, if India continues to grow at even 6.5% per annum, I think all the startups will be fine. All the listed stocks of big companies will be fine. On the other hand, if we go back to a period of 4% or 5% or sub 5% GDP growth, then of course, companies will have to become more frugal. They'll have to tighten their belts. They'll have to focus on generating cash. They'll have to focus on becoming more profitable. Yeah.
Good morning. I just wanted to understand what the outlook is when it comes to the scope of improvement in the recruitment business. Do you think that there is a chance that you'd be able to pass on the increased cost of talent to consumers via price hikes?
Actually, the recruitment market has been on a tear. So, we've had a great last almost 4 quarters now. And there are no signs of the market slowing down. In fact, till 2 months ago, it was mostly the IT market which was sort of doing well for us. And IT is a large part of the hiring sort of mix on Naukri. But now even the non-IT sort of companies are bouncing back because thankfully and hopefully Omicron is now behind us. So we are seeing the high contact sectors also getting back to sort of hiring mode. Now, see, we've been able to, because of the massive sort of scarcity of talent, because of high attrition rates, the hiring cost is a very small proportion of the total cost at all the companies we work with. So companies are looking at 15, 20, 30, 40% salary hikes. So what is, the 0.5% of sales they spend on hiring, it doesn't really matter to them. So, cost is not really a concern for hiring cost is not really an issue for companies. I think the real issue is whether they can get the talent they want. Because talent is in short supply at this point in time.
Okay. And I just want to talk about that in greater detail in terms of, which sectors are driving growth in terms of job opportunities, which are the cities as well that are seeing some, improved trends, and have things, incrementally recovered from the after effects of the pandemic?
Yes, in the like I said, a few months ago, it was mostly IT hiring which was driving our index and our growth. And what you have to understand is that increasingly IT is becoming more and more mainstream. So IT is not just IT services companies now. We have MNC dev centers, we have IT startups, we have digital startups. Even the non-IT companies are increasingly becoming digital companies. So every company, every banking company, every finance company, every insurance company, every retailer is going to become a digital company in the years to come. And they're all sort of beefing up their sort of digital hiring. And I've sort of been telling people that every digital company is going to become a data company. So they're trying to beef up their hiring on the data side, analytics, data science, machine learning, AI, and so on and so forth. And what we are seeing now, and therefore, a lot of this growth was also driven by the cities where there are lots of IT companies. So we saw massive growth over the last few quarters in Bangalore, Chennai, Hyderabad, and Pune. Not so much in Mumbai, for example, because Mumbai doesn't have a lot of IT companies. But lately, we've started seeing Mumbai and Delhi also bounce back strongly. That's because the non-IT sectors are coming back as well. Another thing which we've seen this time around is that our small and medium enterprise business has also picked up. So it's not as if it's only the big companies are hiring, but we are seeing many more sort of small companies also join the bandwagon. So we have, for example, a telesales team which works only with small companies. That part of our business has also been growing at a very massive rate for the last few quarters now.
Right. Hitesh, the other thing that I wanted to talk about was, and just extrapolating the point that you were making earlier, the fact that what we're seeing right now in the world, which started off with the geopolitical crisis, and now it's going to have, repercussions because of the oil price hike for oil importing countries like India, and various other cost pressures that we're going to see because of commodities across the board actually rising up. That its impact on growth slowdown, and eventually, for businesses such as yours and even ours for that matter, you think that's going to eventually dampen ad spends, which up until last quarter was sequentially higher by a good 30%?
Yeah, so there are two parts to our business. There's the IT piece, which is almost half our business, and there is a non-IT piece. The IT piece is more indexed to digitization, if I were to sort of use the word, because more and more companies around the world are now becoming digital companies. So we've seen a massive sort of surge in demand for IT talent just across the board, right? And I'm hopeful that that will continue to be the case, even if you have oil prices going up and so on. Now, I don't know what will happen if oil goes to 150, but I'm assuming that companies will continue to digitize. They may sort of slow down their digitization effort a little bit. They may say, okay, we'll do it in 4 years instead of 3 years, or whatever we were supposed to spend. We'll sort of do it over a longer period of time. So I think that piece should be still okay going forward. It's the non-IT piece, which is actually more indexed to what happens in the Indian economy, which could take a hit, because that recovery is very nascent. Like I said, a lot of these companies were hit for a very long time because of COVID. They have started bouncing back. Non-IT hiring for the first time started looking up very aggressively for us in January and February. Now, if GDP sort of growth gets hit once again because of high inflation and whatever happens as a result of that, then some of these companies could again take a beating. So that is something we should all worry about in the months to come.
Sure. Hitesh, war or peace, the business of love, that's dating as well as marriages, remains intact, I guess. Tell us a little bit more about this recent stake buy of yours in Isle Network. What does it really bring on the table? Because in that sense, you're a bit of a late mover, if I can use that terminology, when it comes to dating platforms.
The singles market is a very complex market. So we've been a number 3 player in the matrimony business for a very long time. And some of the things we did in matrimony 3 years ago worked well for us for some time. But lately, sort of our business had been stagnating, and we therefore went back to the drawing board and said, maybe, it's time for us to think a little differently. And what we've also observed, and a lot of our research has shown that India is changing. And while, of course, at the, you have the Tinders of the world, which are frequented by the 18, 20, 22-year-olds, but even the marriage market is changing in sort of many ways. Many sort of on sites like Jeevan Sathi, for example, a lot of the people who are active are parents, right? And they sort of, take on the job of finding matches for their children. But increasingly, what research is showing is that people want to decide themselves. They don't want parents to get involved. And therefore, there is a space for a network like ILE. So ILE is not really playing in the 18 to 22-year-old dating segment. They are actually a site which is frequented by the 25-year-olds, the 26-year-olds, the 28-year-olds, and but they don't have parents on the platform. And they're the sort of individuals are active themselves, and they take on the responsibility of finding the right match for themselves over time. Okay, initially, they may date, and over time, they may get married. And what ILE has also done a brilliant job of is they have a network of sites. So they have a site for the Telugu-speaking population. They have a site for the Tamil-speaking folks. They have a site for people in Kerala. And some of these sites have really done well for them over the last few years. And as Jeevan Sathi, we don't have a presence in the south. So Jeevan Sathi is more for north and west focused sort of play. So I think this sort of acquisition has sort of just fits in well with our overall sort of strategy, overall approach to sort of do things a little differently from how others are doing them in the matrimony space. And it also gives us an entry into the south, which is where Jeevan Sathi has been weak traditionally.
Before we let you go, InfoEdge India, the company that discovered, from a Zomato to a Policy Bazaar, this was the year of the exits as well, right? But with the way have been performing and the fact that Indian retail investors can now also buy Tesla stocks as well as the FANG stocks thanks to the Gift City exchange, what's going to be the impact of all of that?
So my take on this is companies have to focus on the long run. If they keep focusing on customers, if they keep focusing on creating value for their users, ultimately the business will do well. As far as investors go, they want to back good businesses. They want to make money in the stock market. They're happy to wait for some time, but they don't want to wait forever for that to happen. So my take is that this is every time there's a slowdown, what we see is a flight to quality, a flight to safety. And that is what is going to play out over the next couple of years.
To safety is what we're likely to see. We are, of course, seeing funding still take place in the private market. There does seem to be, of course, a slowdown. Let's see how all of this pans out. Channel check saying there is concentration of capital for the better startups or those with better road to profitability. Hitesh Oberoi, it's always a pleasure talking to you. Thank you so much for joining us live today on The Market. With that, ladies and gentlemen, we're going to take a short commercial. Stay with us. Coming up on the other side is Lakshmi Iyer.